We now start off with news across Nigeria's commercial loans obtained by Nigeria through Eurobonds rose from $1.5 billion as of December 31st, 2015 to $10.87 billion as of the end of the year 2020, indicating a $9.37 billion increase, or about 625% in just 5 years. Now, the debt stock remained at $1.5 billion from 2015 to 2016, but rose to $6 billion by 2017, indicating a $4.5 billion rise within a year. It further rose to $10.87 billion in 2018, signifying an increase of about 81% till the end of the year 2020. However, the federal government still intends to seek more funding through Eurobonds, which would increase Nigeria's Eurobonds debt stock. And our reactions have continued to trail the latest move by the Central Bank of Nigeria, directing all commercial banks in the country to publish blacklisted names and bank verification numbers of customers who fraudulently obtain foreign exchange from banks. Now, reacting to this development, the Managing Director and Chief Executive Officer of Dignity Finance and Investment Limited, Dr. Chijioke Ikechukwu, says that the directive will bring about sanity to the foreign exchange market, ease accessibility of forex to end users, and also halt scarce forex. Dr. Ikechukwu, while speaking in a chat in an earlier broadcast, also noted that the CBN needs to closely monitor the process for effective compliance and prompt implementation.
IMF spokesman Jerry.
It wasn't the first time CBN was insisting that only banks sell the foreign currencies to people. But the issue is some of the problems we encountered in the past. In the 90s, in the early part of 2000, banks were selling these things to the users. But of course, the same problems that we encountered then, the same problems that we are obviously experiencing today. Instead of asking people to go to the banks and buy $5,000 and for payments of school fees, payments of hospital bills and things like that, if we load our MasterCard, our Visa card with those values, you'll see that the malpractices CBN is afraid of will reduce. Because people buy from CBN and they go and sell in the foreign market, that means they have access to cash they're selling. But if you load, anybody who wants to travel, get your ticket, and then we load your card with the amount you want, you pay for it, and you travel with that card. If that system is utilized, you see that the malpractices that we're seeing within this window will be reduced.
Well, that was Dr. Chijioke Ikechukwu speaking. There now players in the Nigerian livestock industry are seeking a holistic approach to cushioning the impact of COVID-19 on their businesses. They are particularly seeking how to remain strong in business post-COVID-19. This will be the thrust of the conference later this year, with focus on finding workable solutions to their challenges. Nara Folayo has the details in this report.
The Nigerian economy was badly affected by the lockdown induced by COVID-19. The livestock industry also had its fair share of challenges, with the poultry business worst hit. Despite the country's poultry industry being the second largest in Africa, with a 180 million bird population, and it being the biggest egg producer on the continent, times have been bad for operators. The lack of adequate maize and soybeans for feed production and other setbacks remain a big challenge for the industry, and this pushed many players out of business.
About 85 million Nigerians are involved in poultry agribusiness along the poultry value chain. The impact of COVID-19 pandemic on this industry has been phenomenal, with steep losses reported by farmers. Production activities have been greatly hampered, and it has been widely reported that many livestock farms, especially poultry farms, have closed.
The authorities have supported businesses in the country to ease the impact of COVID-19, and now the livestock farming industry wants this assistance deepened. It also intends to hold a high-level dialogue on livestock resilience in the post-COVID-19 era later this year. The industry is hopeful this will bring about the needed change in its line of business.
All these intervention measures are just what they are, intervention. and they may not be long-lasting. So the way out is to have a long-range planning. You've got to conceptualize, research, innovate, and then you will develop. This takes time, and the country has to be aware of this, and the Institute has been sticking out its neck in this direction.
Players in the livestock industry had earlier sought a ban on the export of maize and soybeans, which are critical ingredients in the production of poultry feed, to control the price of the commodity. Lara Folayan, TVC News.
It's now time to bring you highlights on the trading flow of the Nigerian Stock Exchange, which was recorded yesterday. Nigerian Exchange Limited, I beg your pardon, at security trading moved higher across sectors as many portfolio planners traded huge banking shares. Let's now join Eving Ekop for the details.
The month of September seems to be drawing investors back to the stock market, fueling increasing transactions in market subsectors. Funds managers may be eager to reposition investment baskets for trade profits of the closing months of the year. Access Bank and Zenith have already captured the interest of many market players with their half-year results, which analysts described as fair achievement under the present economic conditions. It was IT company Chams PLC that made the biggest trade gains, followed by Prestige Assurance and Wema Bank. Closing market activities threw up long lines of business losers, which included Unity Bank, Oando, Union Bank, FTN Cocoa, and Honeywell Flour. The volume of shares traded dropped below 300 million, just as their combined value came below 2 billion naira. Outside Nigeria, African markets traded largely in red. The stock market in Nairobi, Kenya, was down by more than half of a percentage point. Investors uploaded securities for cash, depressing major trade sectors. The market in Morocco also closed negative. Sales of securities had direct effects on the bonds market's corridors. Finally, the stock market in Accra, Ghana, closed in flat territory. Investors showed poor interest for buying companies' equities. Effiong Ekop, TVC News, Lagos.
And bringing some reports from the market abroad, Asian share markets in cautious trade as concerns grew over the Chinese economy after a run of soft data, while the risk of a subpar US payrolls report kept the dollar on the defensive. After manufacturing service adjusted supply bottlenecks are tightening again, with 8 of 9 Asian countries reporting longer delivery times. The uncertainty kept Chinese blue chips flat, though speculation of more fiscal stimulus offered some support. MSCI's broadest index of Asia-Pacific shares outside Japan edged up 0.2% to a 5-week high, helped by buying for the new quarter. Japan's Nikkei added 0.1%, while South Korea's Kospi fell 0.6%. Nasdaq Composite futures and S&P 500 futures were barely changed, while Eurostock 50 futures eased 0.2% and London's FTSE future 0.1%. Wall Street has been preoccupied with the second guessing US August payrolls, which is due to be out today, with task made all the more uncertain by a disappointing reading on ADP private payrolls, but a solid ISM survey of manufacturing.